Hello, good morning, everyone. Thank you for joining us for today's webinar. We are waiting for a few more people to join. So kindly hold on for a few minutes. We will start the webinar in next 5 minutes. Thank you. Good morning, everyone. Once again, welcome to our today's webinar. We are excited to introduce our presenter, Mrs. Padma Jyoti. With 16 years of work in payroll and taxation at Relativity, she's an expert at making complex tax rules easy to understand. So, thank you for joining us today, Padma. The stage is yours.
Thank you for the introduction, Divya. Good morning, everyone. This is Padma Jyoti. I am welcoming you all for this webinar on future proofing your payroll under the new wage code. So, what in our today's session we are going to just give me a moment. In our today's session, we are going to going through significant the operational challenges which have been implemented, operational and tax shifts brought about by the labor codes, and how they interact with the Income Tax Act. So our agenda for today covers a majorly four things. The first one is how the gratuity calculation will happen and how it is the tax exemptions. Same thing for leave encashment and its tax implications, and the latest updates on ESA applicability and its calculations. And finally, we will have a Q&A session. So I request everyone to, if you have any questions, put it in the chat box. At the end of the session, we will discuss on that. So before we dive into the technicalities, let me tell about the relativity management solutions. We are ISO 27001 certified company, and we process 1 lakh payroll records per month. And we had a 17 years of excellence, and we are having and 200 plus clients, and we have been working with 16 cities and 5 countries. So if you see transactions per quarter, it will comes around 12 lakh. And we will handle 12 lakh transactions per quarter with an accuracy rate of 99.49 percentage. Last year alone, we have issued over 5.73 lakh Form 16s while maintaining the 99.699 retention rate. Our services span across from the mid-size to the enterprise clients. Here are the few enterprise clients which have been shown in the slide, and also mid-size clients. And the services what we would do is we will undertake the payroll processing, payroll compliance, payroll monthly compliance with respect to the PF and ASIC, and we will also undertake the TDS related compliances, local law compliances, and we do HRMS tool implementations and supporting the client to maintain it in the proper manner, and the compliance tool. And we will do our consultations on HR and new wage code, and we will also undertake the audits with respect to the HR HR, payroll, and compliance related audits. In payroll processing, what are all activities that we will undertake is we will take care of their payroll management as per the specified SOP with respect to that client, and we will undertake the payroll compliances. In the payroll compliances, we will undertake monthly compliance like PF, ESA, and PT related compliances, and we will provide an employee self-service tool through which employee can submit their FBP bills and expense management, and it is also maintained via the ESS tool itself. And also we will do the consultation work with respect to the payroll processing, and we will undertake the payroll audit assistance. If you require any payroll related audit assistance, that will also we will undertake it. With respect to the payroll compliance, as I mentioned, we will undertake all the statutory related filings, and we will do the statutory audits, and we will have a compliance tool that is our own tool, the Smart Operator, which we will use it for the compliance activities, and the statutory consultations we will provide, and we will also provide the audit assistance with respect to the payroll compliances. And with respect to the tax compliances, we will undertake the quarterly TDS returns. And with respect to that, if there are any corrections and if there are any demands or notices raised by the CPC team, that we will address it. And also, we will issue the Form 16 and 16A for for the kinds we have undertaken the QTTS filing. And also, we will do this investment proof management with respect to both old and new regime, and we will do the TDS audit and consultation, those kind of activities that we will undertake it. And with respect to the LLC compliances, from the registration till periodic filings, and if there are any inspections or visit from the labor department, we will assist them. And maintenance of the labor registers. And also we will do this CLR registrations and amendments separately. And we will undertake the POSH compliances and Apprenticeship Act related filings, and what are the reports that we have to be submitted. And if there are any updates with respect to the local labor compliances, we will let you know. We will guide you on this, how we have to proceed further like that. And in the HRMS tool, we will have it's an end-to-end tool from onboarding to an exit. We can onboard an employee from the tool itself, and we can maintain the core HR. So issuance of letters and employee document maintenance, everything will be handled via the tool itself. And we can also maintain the leave and attendance of an individual employees, and we can perform the payroll, and performance management also will happen via the tool, and business claims will be handled via the tool itself. And exit management, so the NOC process will be configured in the tool, and from that you can the exit management will be happen. With respect to the compliance tools, we manage the compliance activities, and all the activities and reporting will be handled via the tool, and employee queries also will be handled via the tool itself. So if there are any alerts or reminders which has been sent to the SPOC, the client SPOC, it will be done via the tool itself. And we will undertake the compliance audit assistance and compliance consultations. So these are the things which will comes under the compliance tool. And also we will do add-on activities on POSH compliance, S&D Act, and code on wages consultations, and HR consultation, and Apprenticeship Act, and CLRA compliance and audits. And also we will do salary restructuring, and with advisory with respect to the DPDP Act. These are the add-on services that we will do it based on the requirement of the client. So before this is all about relativity. So before we'll start get into the today's agenda, I just want to know about the participants from about the size of a company, so that it would be easy for me to take out the session. So let's. I'm requesting everyone to provide your response on the for the poll. So I have received 65 percentage of response. Still, I need some more people to respond it. Please provide your response so that we can end up the poll app. And then we can go into the today's discussions topics. If you have submitted, please ignore it. Others who have not submitted, kindly submit your response.
The poll has been ended, Padma.
Yeah, thank you, Divya. So let's begin to our today's discussions. And first, let's see about the gratuity calculations and the tax exemptions. So we are going to just compare this with the code on wages and social security, what has been done, what has been initiated, and what is the exemptions that have been provided under the Income Tax Act. So under the code on wages, the standard formula for the gratuity has been fixed as last drawn wages into 15 by 26 into number of completed years. And the important game changer here, it is a definition of the wages. Earlier it was basic and DA, but as per the expanded definition of wages, now it will include basic, day earners allowance, retaining allowance, and all other allowance, if any. And also, you people, most of the people would have, there is a 50% wage cap. If excluded allowances like HRA, special allowance, other allowances, children education allowances, if those kind of allowances, if it is exceed more than 50% of total CTC, the excess amount we will add it to the basic wages. So this will increase the gratuity payout here. So because of this new wage code implementation, gratuity payout has been increased while compared to the before code on wages, if we take in a comparison like that. So now I want to highlight here what is the tax exemption have been provided by the Income Tax Act for the gratuity calculations. So I'm just as an highlight, as per the section 19 of Income Tax Act, the gratuity will be exempted in the list of the three items. One is the gratuity receipt, actual gratuity, whatever that we have received, and the statutory limit that is currently 20 lakhs. In case if there is a change in future, central government will notify, and the exemption allowance. So here I want to mention this 20 lakhs cumulative lifetime cap. As per the subsection 2A of section 19, the statutory exemption limit for gratuity, it is rupees 20 lakhs. It is not for particular employer. This is one or more employers during a lifetime. So as an assessee, as an individual, I can claim maximum 20 lakhs as an exemption throughout my lifetime. So it is not with respect to an employer. And also the exemption formula have been defined here as half month salary for completed year. That is salary into 15 into number of years of service by 26. This is the exemption formula. Here the definition of salary, what has been defined in the Income Tax Act is salary includes only basic pay and day earners allowance if terms provided. So for example, in the offer letter, what are the terms and conditions that we have provided, right? Either it may be in the offer letter or it may be in the appraisal letter. Based upon the terms of employment, basic and day earners allowance will be considered as a salary. And also it has been strictly mentioned in the definition itself, strictly excluding all other allowances and perquisites. So from this, what we can able to take it out as a key takeaway, the allowances, whatever part which has been mentioned in the terms of employment, will not be considered for the exemption calculation. So as what the code says is, we have to make a payment. So the payment is based upon the wages. If the exclusion of wages is more than 50%, then the exceeding amount will be added to the wages and we have to calculate and we have to make a payment. But Income Tax Act says the exemption will be provided on a salary. In that salary, it has been strictly excluding all other allowances and perquisites. So these are this will be excluded. So let's come so next is why gratuity received is partially taxable. So here is a comparison I have mentioned. So as mentioned in the previous slide, Because of this change in the definition of wages, the gratuity payout has been higher while compared to the previous. It has been increased. And from the IT Income Tax Act perspective, Income Tax Act doesn't provide a border wage definition. It has not, till now, it has been mentioned as a basic plus DA. It has not been added as a wage definition has not been replaced under the code on wages. So because of this difference, there is a surplus amount which we are getting. So that amount will be considered as a taxable under the income from salaries. So let quickly we check on a example. So in this scenario, I have considered the employee is retiring after 20 years. The CTC what he has drawn at the last is it's a 1 lakh per month. Basic is 35,000. DNS allowance is 5,000 and all other allowances are coming to 60,000. So under the new wage code, under the code on wages, the payout would be the basic salary we will consider here as a 50,000 as per the 50 percentage of CTC rule will apply because if the base salary is wage is 50,000 and the gratuity payable is 5,76,000, I'm sorry, 5,76,923. But under the Income Tax Act, the exemption would be provided only on the basic plus DA. So here the basic plus DA is coming around 40,000. So if I'm considering 40,000 as a salary and calculating the exemption means here it is coming around 4.61 lakhs 532. If you see the impact, there is a changes in the base value. Here, there it was 50,000. Under the Income Tax Act, it is 40,000. And there is no change in the formula also. 15 working days by 26. That is the same. But the taxable amount, this 1,15,384, the difference amount, whatever it is coming, it will be added as a taxable for that particular individual. So if an employee who comes under higher bracket, that is a 30% slab, because of this gratuity, he will get an additional tax to be paid, additional tax to be paid for rupees around 35 to 38,000 approximately he has to pay. So this is why the gratuity amount, whatever that we are getting, which is not exempted, there is a partial taxable will be applicable. So, as a summary, I just want to give a summarize here. Whatever amount that we are calculating, the gratuity payout will not be considered as an exemption. Here, for the exemption perspective, only basic and DA we have to consider. Based on that, the exemption has to be provided. And the differential amount, it will be added as a taxable under the income from salaries and tax has to be calculated appropriately. This is next we go on to the next session what we want to look onto it. This is the leave encashment and its tax calculations. So under OSHWC code, leave encashment is also payable on wages for the workers, and for that also the wage definition has been the same. Under statutory, for OSHW, every worker employed in an establishment entitled to annual leave with wages in a calendar year. So at the time of retirement, when we are encashing the leaves, we have to make a payment on the wages instead of basic plus DA. So this is what the code says. And definition, we have already looked in the previous example, so I'm just ignoring it. Ignore the definition of explanation for the wage definition. And let's see how the tax exemption rules will place under the Income Tax Act. So, with respect to tax exemption rules, first they have been categorized as a government sector employees and a non-government sector employees. For government sector employees, whatever leave encashment on retirement that we are providing, it's fully exempt from the tax. So there is no conditions and no calculations which is required. But for the non-government sector employees, the leave encashment exemption will be provided of the least of the four items. One is actual leave encashment receipt, and the second one is a statutory limit notified by the central government, the current limit which is 25 lakhs, and the third one is a 10 months average salary, and fourth one is a cash equivalent of earned leave credit maximum 30 days per year. So these are the four, from this four, whichever is less will be considered as an exemption. So in like gratuity, for leave encashment also, there is a statutory limit, that is a 25 lakhs. As per the subsection 2F, this statutory exemption applies to aggregate leave encashment received across all the employers during a lifetime. This is also not restricted to particular employer. This the exemption for leave encashment is also, it's towards the lifetime. And for this also, for leave encashment also, the same salary definition have been provided in the Income Tax Act. For exemption computation, what we have to consider is only basic pay and earners allowance. And we have to strictly exclude all other allowances and perquisites. So here, if you can able to see it directly, right? We have to provide the payout should be happen on wages, but for the exemption, it will be considered only on the basic plus DA. Because of this, the higher payout and the tax, the balance employer has to pay additional taxes on the whatever balance amount that he is getting. With respect to gratuity and leave encashment, since there is a statutory limit which is available, ceiling limit which has been provided for the throughout the lifetime, it is better for each and every employer to get a declaration from an employee what are the exemptions that they have claimed in the previous employer. So based upon the declarations, you can provide an exemption. So irrespective, we cannot consider that they don't have an exemption. We can provide whatever value will come paid as a gratuity and leave encashment will not be considered as a exempted. So it is better to have to collect a declaration from an employee, and then based on that the tax workings can be happened. So this is from this leave encashment, and gratuity is also a partial taxable component. It is going forward, it is not a fully exempted component. Based upon the calculations which has been exemptions which has been provided by the Income Tax Act only, the exemption should be provided. If we are going to provide more exemption, there may be a chances in future if department comes and asks for the clarifications. That time we have to pay additional taxes for the excess exemptions provided to the each and every employee. Not only the tax, there will be a penalty and interest will be added to it. So let's come to the third thing. So employer contribution on PF versus the tax exemptions. So in generally after the implementation of new labor code, the basic underlying concept one is, instead of basic and DA, irrespective of any act, PF, ESI, minimum wages, for everything, the wage definition has been changed. So the new wage definition will be replaced with everything. That is the base underlying change which has been provided under the new labor code. Earlier, with respect to the provident fund, we will calculate in the EPFO itself, it has been clearly mentioned as a 12% on basic. Because of this change, how it will get impacted, and there is a tax implication for the employees also. Let's see how it will get impact on this. So I have taken an example with the for the PF calculation. Consider the CTC per month is 1 lakh and basic plus DA for that individual is 30,000 and allowance is 70,000. So on this calculation, it's a comparison, just replacing the definitions. Okay. So under the new wage code and in existing practice, we will consider the wage as 30,000. That is basic plus DA will be considered as a wage. And as per the Social Security Act, we will consider 50,000 as a 50,000 will be considered as a wage because of the 50% wage cap rule. If you see the impact, there is an impact of 20,000 base value itself. Base value has been increased from 30 to 50,000. And with respect to the employer contribution rate, there is no change. The 12% will be continuous same. There is no change in the contribution rate till now. And with respect to the monthly employer PF contribution, so earlier it was 3,600. From 30,000, 12% is 3,600. And with respect to 50,000, if we calculate 12 percentage, it will comes to 6,000. So there is a change of 2,400 rupees per month. So this is an employer contribution. Okay, please kindly note it down. This is an employer contribution, not on the employee side. So from the income tax perspective, there was certain taxation will be provided on the retirement benefits. So whatever retirement benefits that employer is providing to an employee, with respect to PF, pension, PF and pension, it should be restricted to the 12 percentage. In Income Tax Act, it has been clearly mentioned employer PF contributions to any recognized provident fund, to EPFO, to PF, EPFO, or to any trust, it's tax exempted strictly up to 12 percentage on basic plus DA. In case if employer is contributing more than contributing on a wages, whatever the differential amount that you are contributing will be considered as a taxable for that individual. So in the example, 2,400 per month will be added to a taxable income, and the taxes has to be paid by the employees. Even the the Social Security Code mentioned that PF contributions on a wages, but Income Tax Act doesn't expanded this change in the base from exemption. So if it is more than 12 percentage on basic and DA, whatever amount that we are contributing will be considered as a taxable. And also there is a monetary ceiling cap which has been provided for the retirement benefits. That is, if an employer contributes more than 7.5 lakhs towards any retirement benefits. So here the retirement benefits will come as PF, NPS and superannuation is entirely taxable. And also the amount which we are going to withdraw from the interest which is going to be accrued from the exceeding amount will also be considered as a taxable. So from this scenario, what we can able to consider, what we can able to judge here is, even there is a change in the wage code definition, even it has been mentioned, it has to be on a wages. Since income tax department haven't made any changes with respect to the employer's PF contributions, the exceeding amount, whatever that we are providing, will be considered as a taxable, and the employee has to bear the additional taxes on that. So this is how the PF will get implicated on the because of the code on wages changes. Um, and in the last month, let's come to the final thing. This is a ESA applicability and calculations based upon the recent notification shared by the ESI department. The applicability and contribution on wages with respect to the social security have been redefined. So in the latest notifications, what they have mentioned is um, ESI will be applicable on the statutory wages instead of gross pay. So I have mentioned what is the current methodology that we are using it as a gross salary basis. And I also have mentioned what is the definition which has been included as per the section 2 of 88 with respect to the ESI. So with that's the current practices, we will the applicability will be calculated on the gross salary. For example, if an individual who's having basic HRA and other elements, the total gross salary will be considered. And if the applicability threshold, the total gross salary, if it is more than 21,000, then for that individual will be applicable for the ESI. That is how the current methodology of applicability will be defined. Even if gross exceeded due to HRA or special elements, the employee was excluded from ESA. Uh, for example, if an individual whose basic is 15,000 and he is getting a HRA and other elements as a 15,000, then if you see basic is less than 21,000, still the employee was excluded from the ESI, and there will not be any ESI contributions will be deducted from him. This is the current practice which we are following it. And once an individual who has been contributed 1 month in the April to September, then he has to do the contribution until September. We will not exclude them from the ESI contribution during the mid of the contribution period. So that is also the same methodology. That's the methodology that we are following it. With respect to Section 288 of, as per the Code on Social Security, it has been clearly defined. Applicability will be calculated strictly on the wages. So here, if you see the example which I have quoted, the employee's total gross salary is 30,000. But his, if you consider 50 percentage of CTC that we have to consider for the wage, right? In that case, in this case also, it will comes around 15,000. So the wage is coming as 15,000. So this individual will comes under the ESIC. So applicability going forward, we have to calculate it strictly on the wages. And the ceiling limit is going to be the same, that is 21,000 per month. There is no changes in that. And the third one which I want to highlight here is here HRA, statutory bonus, and overtime or any one-time payments that we are going to make for that particular month will also be considered as an exclusion, and gross salary can exceed 21,000 will remains covered. So there was a major shift here. Who the employees whose gross salary is more than 21,000 also will comes under the ESA applicability. So because of this change, many of the people comes under the ESA applicability. So this is one important key thing that we have to take an action. So we have to look on all the salary breakups and we have to recheck from whom and all we have to reduce this. For those people who comes under the ASIC bracket, we have to we have to generate the individual code, individual significant IP numbers, and we have to make the contributions over that. Just I have this is just an analysis how the ESI coverage status will be defined. In this, if you consider an individual who is having a 25,000 as a total remuneration. So here the breakup is very simple. I have considered the inclusion component which is 40 percentage and the exclusions component which is 60 percentage. And also I have derived the ESI wages for each and every remunerations, and I also mentioned the coverage status. So for example, if you take remuneration is 25,000 means then the basic pay, that is inclusion component, is 10,000 and the exclusion component which will comes under the 15,000. So since exclusion is more than 50 percentage, the exceeding amount whatever that we are having above 50 percentage will be added to the basic pay. So here the 50 percentage of total remuneration is will comes under 12,500. So so the current ESI wage is 12,500. Since it is less than 21,000, he will also covered under the ESI. But his total remuneration is more than 25,000. And in the second use case, I have taken an example of 35,000. In 35,000 basic pay inclusion component will comes as a 14,000 and the exclusion component will comes under 21,000. So inclusion is less than 50 percentage. So the ESA wage will comes under 17,500. In this case also ESA coverage state, ESA will cover for this particular employee. And the final use case which I have taken is 43,000. In this 43,000, inclusion component will comes under 17,200 and the exclusions component will comes 25,800. So if we take 50 percentage of wage, then it will comes under the 21,500 rupees. So if you see the remuneration to whom we are paying in the overall, if they have more than 42,000 only, then those peoples are not covering under the ESI. Other than that, who are employees that we are having, if the ESA wages, if wages is going less than 21,000, all the individuals will be covered under the ESI. So the current action that I would require all the employers to undertake here is review all employee salary structures exceeding 21,000 as a total remunerations, and employees who are outside of the ESI may now become eligible for the mandatory registrations, and we also have to do the contribution deductions under section 2 of 88. So this is one major change. Because of this, there will be a impact on the employer contribution. Employ CTC will get higher for each and every individual for the employees who are coming under the ESI, and there will be a negative impact for the employees because their take home will be reduced. So, and this we have seen an example for the ESI applicability validations. And with respect to the ESI calculation, for example, in a month payroll, we will have this one-time performance bonus, and we will also provide some incentives like that. If in that case, how the calculation has to be undertaken. So, this examples will provide a overview on how calculation has to be how ESI calculation has to be undertaken on a monthly basis. So consider here the basic plus DA is 12,000 and HRA is 6,000 and special allowance is 4,000, and there is a one-time performance bonus which is coming around 20,000. And the total gross remuneration which is coming as 42,000 with the sum of all the four components. So if you take in this basic plus DA or the core wage component for which the ESIC has to be calculated. And with respect to the house rent allowance, it's an excluded component. It's an excluded component, will be excluded from the wage calculations. And with respect to the special allowance, uh, with respect to the special allowance, it is also an included component for which we have to contribute the ESI wages. And one-time performance, as a specially excluded, it will not be considered as a wage calculations. And the, excuse me, give me a minute. I will just. So from the total, sorry for the interruption. Total gross remuneration is coming around 42,000. From this, if you see the monthly cap limit, it will comes around the maximum exclusions limited at 21,000. So the sum of all other exclusions exceeds cap of. So here the final ESI wage will be comes under the 21,000. So from this 21,000 we have to calculate the employee share and employer share. This wage calculations will be differ month on month basis based on the components that we are based upon the individual one-time components that we are providing to an individual employees, and it will not be standard for each and every employee. So in the final, let's summarize. I just So with respect to this changes in the wage code definition, okay, the definitions has been changed with respect to the wage throughout all the retirement benefits, and with respect to the statutory calculations has been mentioned by other code on social security. It has been highlighted. So gratuity and leave encashments are payable on wages, um, but still, what is happening with respect to the income tax act is income tax act that doesn't have changed any definitions with respect to the exemption calculations. So it remains continuing to be the same. So whatever amount that we are paying to an employee, it is not fully exempted. These are the partially exempted. So this is a one point that it's a one summary point that I want to keep mentioning. And with respect to the statutory ceiling limit, it's recommended to get a declaration from all the employees to whom we are going to provide an exemptions to understand what are the exemptions amount that they have claimed in the previous employer. So based on that, we can provide additional exemptions. And the third thing is with respect to the PF calculations. So PF in the Code on Social Security, it has been mentioned PF is contributed on the wages with respect to 10 or 12 percentage like that. Uh, if we are contributing on wages, there is a minimum wage ceiling limit 1800. If we adhere, that is fine. But if an organization choose to contribute PF on wages, means whatever exceeding amount that we are contributing 12 percentage more than 12 whatever exceeding amount contributing on 12 percentage basic will be considered as a taxable, and for that amount we have to deduct the taxes appropriately, and it will have a tax impact to an employee side. And with respect to ESI, as per the latest notifications, it has been clearly mentioned going for that as per the code on wages, ESA applicability will define on the wages, not on the gross salary. Because of this change, there will be many employees who will comes under the ESA bracket. For them, you have to undertake the registrations and you have to make the contributions also. These are the major changes which has been which will have an impact in the tax calculations and the payroll calculations methodology. Um, so that's all from my end. So if you have any questions, please put it in the chat box. I will take out the each and every questions. I receive a question from Nisha that can you please share recent ESI notifications along with the presentation? Once this webinar ends, we will share the notifications and also the presentation with each and every one of you. And I receive a question from Sunil. What is the definition of a workman or supervisor covered? Um, so, in as per the new wage code, they have mentioned definition. As per the definition, the individual who are responsible for other person's actions and belongs to the admin and the management team are considered as a employees. Apart from that, whoever persons are coming are there will be considered as a workers. So supervisory is a role, they will ensure other person's action. So they will not comes under the definition of workman, they will be comes under the employee category. As per the government or EPF rules, what is the applicable PF contribution for employees? Can an employee choose a fixed PF deduction amount, or does the contribution have to be calculated as a percentage of the eligible wages? So PF contribution rate as per the EPFO, it has been defined as 12 percentage. Employee can choose more than 12 percentage on a basic. For example, if an employee wants to, if my basic is 15,000, 12 percentage on this is 1,800. But employee wants to choose additional contribution, wants to contribute more on a PF, means what they can do is they can go for the VPF. And for in VPF, they can go up to the wages, higher of the wages that I can do. I can contribute. For example, 15,000 is the wage, PF wage that we are quoting. So I can contribute 5,000, 10,000 based on my requirement. I can choose a fixed deduction. But that is a voluntary, not as a fixed PF deductions. And whatever the fixed PF deduction, that is from 15,000 12 percentage, right? This 1,800, the same amount will be contributed by the employer also. So there should not be two different amount. Employer and employee will contribute to the, as per the act, that is a minimum contribution, 12 percentage on wages, 12 percentage on a basic, or restricting to 1,800. In these are the various options, these are the various options that company can follow. So based on this calculation methodology, the contributions will go on a regular basis. If an employee wants to go for a higher deduction, other than this will be considered under the VPF contribution. An employee date of birth is 9 June 1969 and his date of joining is 9 August 2024. Is he eligible for gratuity on his retirement on 20th June 2029? With respect to the gratuity eligibility for an employee, for full-time fixed-term employment, there is a 1 year completion period, and for employee, even if they have completed 4 years to 40 days, they are eligible for the gratuity. In this case, employee have joined in 2024 August and he is going to retire on 2029 June. So this is covering approximately 4 years, 10 months service that he is going to do with the organization, right? So then he is eligible for the gratuity payment during the retirement. What is the retaining allowances? Here, the retaining allowances means in the salary breakup, certain companies will mention as a retention allowance. It's a fixer in the terms of employment, and also if there are any other allowances mentioned in the salary breakup other than the specified exclusions, will be considered as a wages. ESI wages to be calculated only on basic plus DA, whose wages to be 21,000. Um, So here there is here we will not consider basic plus DA at all. We will derive the ESI wages. While deriving the ESI wages, there are certain step-by-step calculations that we have to undertake. First, the sum of inclusions component, then sum of exclusion component, and 50% on the total remuneration. So if the sum of inclusion component, if it is greater than the 50 percentage of total remuneration means, then ESI will be calculated on the sum of inclusion component. Otherwise, what we have to do is we have to calculate the ESI on the 50 percentage of remuneration. So this is how the calculation methodology would be. Earlier, what we will do is we will go with the gross with respect to ESI, and with respect to gratuity and all, we will go with basic plus DA. But going forward, after the implementation of new wage code, first we have to derive the wage. From the wage, the contributions or the calculations will be calculated. And next, what are the components to be considered for the gratuity? So with respect to the components, whether it has to be considered for the gratuity or not, it will be differ for each and every organization based upon the components that they are having. But the framework which have been provided by the code on wages is very simple, by the labor department is very simple. They have mentioned exclusion list. Like in the exclusion, specific exclusions, they have mentioned that HRA will not be part of it. Conveyance or any value paid for the traveling concessions, overtime allowances, allowances paid for their defray expenses to undertake their roles and responsibilities, and contribution paid towards PF or any pension scheme. And in some cases, we will go for the court cases and all, right? Based upon the judgment, we will make certain payments to an employee. So those kind of payment, these are the types of payments will consider as the exclusions. Other than that, whatever components that we are paying will be considered under inclusion category. So based upon the components that you are having, we have to first consider whether we have to first segregate whether they will come under the specified exclusions. If it is excluded, we can exclude the amount, and the remaining component we have to sum up, and we have to check whether this remaining component sum up is less than the 50 percentage of remuneration. If it is less than the 50 percentage of total remuneration means, then gratuity to be calculated on the 50 percentage of total remuneration, or else it will be calculated on the inclusion sum of inclusion components. Is there any specific percentage for special allowance in salary structure? So in general, what we will do is with respect to the special allowance or other allowance and all, Most of the times it would be a balancing figure. We will have a basic as a 50, HRA will be 50 percentage on basic, and conveyance maybe 5 percentage or 6 percentage, and LTA will be provided 8 percentage, like that. So based upon the organization requirement, in every time this special allowance would be a balancing figure. So there is no specific percentage for any for the special allowance. Under the Code on Social Security and Code on Wages, what is the definition of wages? Is the definition of wages is the same under both codes? Are there any differences between the two? So in the new labor code, the definition of wages is same across all the four codes. There is no changes in the whether in code on wages it is different, and code on social security, like that, there is no differences. The major reason for coming implementing the new wage code itself to have a common definition, to ensure the commonality across all the acts, whether it is to be the wages, minimum wages, or bonus, gratuity, and uh, uh, fixed payment of wages, equal remunerations. In all the acts, they want to standardize the wage definitions. So that is why it has been compressed to four codes, and it has been implemented. So the wage definitions are same in all the four codes. Can you explain the exclusion in ASI? Um, can you little bit more specific on your question, because exclusion in the wages is there as per the calculation, but in ESI there is no specific exclusions have been provided. Can you give little more highlight on your question, Mr. Ahmed, so that I can able to answer this? Whether PF will change when bonus and incentive are provided. So, Kamlesh, as per the new wage code, there are from the EPFO till they haven't not mentioned we have to make a contribution on the wages. So, still 12 percentage on basic, it's going to be continued. And also there is a minimum wage ceiling of 1800. So as per the current situation, we can continue with the 12 percentage on basic if we are following it, and that would be a right methodology that we have to do it. And when it's to be with the wages, we have to derive the wages on monthly basis. Based on that, it may change, but still we need more clarity on the month calculations, and it will be provided in the upcoming FAQs in the format like that from the department. If employee is opting for VPF, is that employer contribution also should be the same, or 12 percentage on basic should be calculated? It is a voluntary contributions, right? Employee wants to do voluntary savings. Instead of they are doing it in other investment category, they are doing it in a provident fund. It is a voluntary. If employee choose to do it, it is not required for employer also to do it. Employer can do their contribution on the minimum requirement, that is 12 percentage on basic. Or if the organization is following for 1800 minimum wage ceiling, then it would be considered as it is. 1800 we can do it. An employee date of birth is 3/5/1961. He is eligible for ESI. ESI applicability will be defined based upon their salary. So if their wages is going to be less than 21,000, then he is eligible for the ESI benefits. Which allowances are included and which are excluded from wages. So, as I mentioned earlier, HRA, conveyance, and value provided for any traveling concessions. If there are any defray expenses, for example, mobile reimbursement, and it is handled as a reimbursement, then it will be considered as the excluded components. Overtime allowances which we are paying, and if there is any amount which we are paying to an individual based upon the judgment of the verdict of the judgment. Something like those are the components will be excluded. Other than that, whatever components that we are providing or allowances, which will be considered as a inclusion component. Can you give some examples of inclusion component? Uh, for example, in the I think with respect to the inclusion components, basic, dearness allowance, and special allowance, other allowance, and also whatever that we are providing in the name of children education allowances, and the allowances which are not listed in the specified exclusion category will be considered as an inclusion component, and we have to consider that as an inclusion component actually. Gift and meal coupon are neither mentioned in inclusions or exclusions. If we are adhering basic as a 50 percentage of CTC, do we need to consider gift and meal coupon value while calculating a gratuity on an employee? Meal coupon and gift vouchers are a part of wages as it is treated as a benefits. In the wage definition, it is mentioned benefits in kind, whatever that we are providing up to 15 percentage, it will be considered as a wages. So meal coupon and gift have been part of the wages. So if, for example, basic and also you have highlighted basic as a 50 percentage of CTC. Not basic alone will be contributing factor for the gratuity. All your salary components have to be looked. Whatever components will be considered as an inclusion. Sum of all the components, sum of all inclusions. If that sum is all inclusion component total, if it is more than 50 percentage of basic, then gratuity has to be calculated on the inclusion component, not on the basic, because this rule will be override actually. Gratuity will be calculated on the inclusion wage itself in sum of inclusion component. If that value exclusion, if it is getting exceeded more than 50 percentage means, then the differential amount we have to add it as a wage and we have to add back to wage. That is how wage will be defined. If sum of inclusion component itself, if it is coming around 60 percentage means, then the gratuity calculation would be provided on the 60 percentage on the remuneration. Please explain how to calculate ESI. There is no change in the ESI calculation methodology, but here the change itself, earlier we will do it on a gross salary. But now what we have to do is we have to calculate the inclusion component sum, and also we have to calculate the 50 percentage of the total remuneration, 50 percentage of the gross. Whichever higher will be um, considered for the calculation, will be considered as a ESI wage. For that, employer has to contribute 3.25 and employee has to contribute 0.75. So gratuity is need to pay for non-FTC for 1 year. If there is a employee-employer relationship and the term has been fixed, and if those people will be termed as a fixed term employment. So the people who are comes under the fixed term employment, the workforce which comes under fixed term employment, for them we have to provide the gratuity benefit. As per the Income Tax Act, gratuity maximum tax exemption limit is 20 lakhs. If employee worked for 5 companies for the period of 5 years each and his gratuity is above 20 lakhs, how tax will be calculated? So whatever amount that you are going to pay, since he was already claiming the exemption more than 20 lakhs, right? So whatever amount that you are going to make from your employment, that will be added to the that will be considered under the salary as a taxable component, and we will deduct tax as per the income tax slabs.
Padma, we are running out of time. Maybe we can end up the session. If they have any questions, they can write an email to divya@relativity.co.in.
Thank you, Divya. Thank you for giving the notifications. If you have any other questions apart from this, please write it to Divya at Relativity. We will answer to each and every your questions. Thank you for your time. It's a wonderful session for me. Thank you for your active participation till end of the session. Thank you, everyone.
Thank you, everyone.